Hey everybody, we're going to jump right into it. So I can see that we rallied and everyone's all giddy, but the bottom line is you still have a third down day here. We just see 1, 2, 3 walking us down. I think a lot of this is the fact that you're finally over the FOMC minutes. I'm not going to spend a lot of time on a bunch of people arguing about something that they're not going to do anything about. Seems kind of pointless right now. There are some things that I think are really important to note. If you go and take a look at this from an hourly standpoint, you have broken and it's still there. And I think we still have to pay attention to it. So if you come straight up, you can see the break from there. If you come over here, you can see that if you do it as a fork, for some people that know, what forks are, but you can actually see this and the break here. And so since then, all they're really doing is walking you down, breaks this one, breaks that one. And so you have these kind of channels in here and you're unable to get through them. You could even go as far to say, if you broke this down, you could even see a channel right in here and you've broke that one. So it's not great. I get people getting excited because stocks didn't go down for a day. But when you really look at this, the fan is actually getting worse and declining. So it's not something that I'm overly excited about. If I got rid of all of this and just did the simple things and dropped volume profile here just to see where all the players are at, you'll note that the ES did bounce off that volume low area, volume area low versus the point of control that you cracked like an egg and then just went straight down. And that was literally straight down when it cracked. And it is what it is. It just failed. But from up here, obviously you have that value area high from this area over. And I always take those lows and just kind of want to know the lay of the land. Super important. So if you had to really watch the area, this area is significant. It really is. That 63, 69, 75. You just do not want to crack that area. So I would mark it whether you're just trading stocks or whether you're trading the futures. The other thing that I would take from this, and the other thing I would take from today, is that if you come across and you take a look just from here, you have that channel. Now we're going to clone this for a sec. And if we just look at that channel right in here, you could see broke the channel, tried to break, tried to get back in the channel, did for a little bit. You're still out of it. So people will say, why is that the channel? What you do is you always clone them so that you get the same trajectory of the lines. And then you just look at the lay of the land and you see where you're at. And you can see right there as the crow flies or some other fancy saying. But nevertheless, you just clone them. Tries, fails, tries, complete rejection, tries to get through it by the end of the day and fails. Now, that said, you still have this level down here that you'd have to watch. And if you crack this, then you'd have to worry. And you would have to worry about that because you're breaking down. The other thing that you're doing, besides breaking out of this channel to the downside, besides holding this and still below the point of control, if we broke this up for a second, I'm just getting technical so that you have something to work with tomorrow. But if you looked at your trend line here, you would have to say that the trajectory of that, is it getting better or is it getting worse? Well, right now, you'd have to say that it's getting worse. You take this point and that point as well, and you would see that you're fanning to the downside. So while we're all getting giddy because we didn't fall off a cliff, which we actually did, and then just bounce because we're oversold, and we're already back to the neutral. Just understand that. You're already back to neutral on the ES. And I get that everyone's happy that we didn't break, but candidly, is this going to be deep enough? Time's going to tell on that, but for me, looking at this, I'm not overly excited. I'm glad that we're not dropping like a stone. I'll leave it at that. And I do think it's important to note that you still lost some major sectors that we're going to go over, but we do see the first sector that cracked through this whole thing already rallying, and we're going to go through that too. I just want to take a second to just review this so that you can see this as well on the NQ. You can see how we sold down. We made a lower low. I'm going to leave this here for time's sake because I'm going to really try to pack in the technicals in this video for you. As always, subscribe to the channel, click all notifications. I'm going to leave that mark in there, show you why it's there, and show you why all this is in here. But you would have to look at this and say that here we are, here's the break, here we are on the RSI. You have a negative divergence on the entire NASDAQ. And that in and of itself is an issue. And it's definitely something that I'm paying attention to. And I'll also show you how you can tell when this may be coming to an end. I'll show you like a really quick way of doing this. But if I drop this to the 4-hour, the one thing that you would say is, oh, well, we're oversold. You're due for a bounce. I mean, there's no bones about it. You should have some kind of bounce on the market tomorrow. There should be some names that bounce. And it's usually those that sold first that tend to bounce. Also the ones that people have been piling into, and you had some really big moves like PLTR back over the 55, and we'll get there. We're going to get to all of it in a very short order here, but I want to just point out the basics where, yeah, you came down to 14 on the 4 hour. Yeah, you bounced. Cool. You still have a long way to go. Now, on this point of control, it's at the same exact spot where we dropped the ES. You'll note the difference here on the 4 hour that you're below on that 4 hour. If we go to this on the hourly, you'll note that you're failing on the volume area low there on the hourly. If we drop this onto the 15 minute, you get it? So you're not clearing that volume area low like you did on the ES, which means to me they're still buying defensive names. Here you are at 5 o'clock to 320, they pop you over, and then what do they do right after? Pop goes the weasel goes pop, and then they bring you down. And again, I'm not saying you can't get over it, but you're not. So what you'd want to do is watch that level tomorrow. And it doesn't get any clearer for you guys. Just write that level down, equate it out to the QQQs if you want to. I want to give you this because it's something that I use, and it's something that a lot of people really aren't aware of. So if you go here and you go let's do it this way. SDFI, that should give me what I need. No, I think it's SDFI is the way they do it on this one, or FDSI. Give me a second here. NDFI, and you're gonna have to listen to me ramble because I don't have time to edit this. Got it. All right, here it is. S5FI. So that is stocks above the 50-day. Then you're going to divide that by NDFI, and then we're going to click right on that sucker. And you're going to get a chart. When you get that chart, you're going to turn it into a line. So you just screenshot this. What this is going to tell you is that stocks above the 50-day on the S&P are greater than stocks above the NASDAQ. Why is this important? I just showed you that the NASDAQ is failing where the S&P rallied over it. If you go back and you overlay this with all the great corrections and where the great corrections stopped, when the NDFI starts outperforming the S5FI, which are stocks of the 50 and the 50, of the S&P 500 and the NASDAQ. When you see that, this is when those bottoms are usually put in. A lot of people don't use this because they don't really understand what it's telling them. But if we were to look at this and then just did something very simple, and we'll click right here for a second, and let's just take the S&P 500. And we're going to click on that, and I'm just going to click right here, and we're going to drop it down. The reason I'm explaining this stuff as I do it is because you guys in the comments say, hey, how'd you do that? That was the cat's pajamas. And if we just look at this, you guys don't say cat's pajamas, but I'm going to bring it back. So if we take a look here, like you saw on August 5th, 2024, what happened? If you went here and you saw where you're at, Tuesday the 8th, peak. Where's the high of the markets? Where are the valleys, right? So the valleys are actually what? The highs of the market, of the S&P, right? They're telling you that. What you're looking for is you're looking for a decline. And what that is telling you, and what that decline is telling you, just to walk through it really simple, and I can do a whole video just on this indicator. What it's telling you is that you're rotating out of defensive and into higher beta names. It's not really rocket science what it's doing, but if you're trying to determine real order flow from institutions, and you know the 50-day is what's important, maybe you should use this metric, and maybe you should use this indicator. You can screenshot it. There it is. It's free. My gift to you. And it works. You will go through time and you will look at these areas and go, how about that? That's exactly where we turned. And you can see it over and over again. It's very hard to miss. And you just go, I don't know how far back it goes. It probably goes back at least 20 years. You probably even go take a look at it on the weekly. It'll probably be very, very clear, isn't it? So something for you to use and something for that metric. Do you see any kind of turn here yet? So there's no kind of turn there. All right. So not to be the party pooper here because we rallied and things didn't fall apart. But I think a lot of it had to do with short covering. If we go to the VIX and we just go back here, how many corrections ended with 15? Or are we saying that we don't need the VIX anymore? Or someone's going to come up and talk about VIXpiration again like they know what they're talking about. In other words, no one's buying protection. So you have less protection being bought now than you did August 1st. And look at the move that you just had in these names. And I think that's what people aren't getting. Like these things are selling off really hard and everyone's getting excited because they have these kinds of bars. I think it's great that you have those kinds of bars, but I want those kinds of bars to have follow through. Now, maybe we're going to get that kind of follow through today. Maybe we're going to say it. But I think you have a lot of rotation and a lot of people that do not know what to do. And I'll give you an example. Here's a great example. Here are the home builders. Here's the 10-year. 10-year rallies. FOMC minutes are out. Here's the dollar. The dollar is just flat. It doesn't know what to do. Home builders actually drop. And then people are going to say, well, home builders dropped because of Toll Brothers. Well, Toll Brothers was up green on the day and did rally and just came all the way back. But why did home builders go down? All right, because they're not going to cut interest rates. Okay, then why is KRE up? What you have is a market that is completely bifurcated and it doesn't know what it wants to do. And when you have markets like that, you have to understand you're going to have massive volatility. So I would expect more volatility like you had today. And then what happens is certain names are going to get grossly oversold and present huge opportunity. And some names are going to rally and then they're just going to puke those names out because they're secondary names. It boils down to the same thing you saw with RBLX. RBLX is not falling down because of the rally. It's going sideways because there's so many other great names to short. Today was probably one of the single greatest shorting days, in my opinion, of the year. And it literally was just, I don't know another word, bonanza. But between shorting CVNA, this was a home run today for us, shorting this. I mean, it was just go through the list. PLTR. I mean, people are chasing these like they're missing something. And all you're really getting here is this oversold bounce. Now, I'm just looking at them all. Coin. Every single one of these, we were up over $10 and on the short side. Micron, I only made $3. PLTU is an easy short. Always look at shorting those bull funds, those ETFs, because they're loaded. NVIDIA was a super easy short. So the question now is, why are you rallying? Are you rallying because somebody made a mistake yesterday? Or are you rallying because everybody that sold short doesn't want to hold overnight? Because do you really think the people that sold the institutional levels, they had to get out, they changed their mind and they're getting back in today? It doesn't work that way. None of this works that way. And once you get that, you'll start looking at certain things. Like, for example, one of the key things I really wanted to bring home yesterday, and people know this that are in the community, was we cracked. Like the IGV, we lost the IGV yesterday. You're losing Bitcoin. And now this is where it gets, to me, this is where it gets interesting. We're losing Bitcoin. We're still below the 55. And people will say, well, it's just like it was here. Well, the RSI didn't look like that, did it? So in other words, if I take the RSI here and I drop this down and I say, well, we undercut here, so this is just like here. It's nothing like that because here was the higher high and here is your lower high on the RSI. You don't have to believe in RSI, but it believes in you. So when we see this stuff, we just want to pay attention to it. It doesn't mean that you can't hold, but if you're looking at some of these major names breaking down like this, and you think everything's fine, look at Apple. Does Apple look fine? Right? Apple was like one of those names that was holding that's starting to roll. Look at Microsoft. Does that look like it came back? Meta, right? These names, the rallies that you're seeing were extremely weak and they were short covering in nature. I'm not knocking it. This is what I see that was interesting and that has my attention. And this is where I did put capital today. The very first one to break down and hit a high and then roll over was uranium. Out of all the sectors that cracked, out of all of them that cracked, uranium cracked. And when that cracked, it started this process. So this actually happened before August 1st. You'll actually see this drop happen before the August 1st drop. And so if you go take a look at the SPX, you'll see when the August 1st drop was, uranium was the first leading sector to actually crack. So when they crack, you go back and you mark them. And then you say to yourself, first in, first out. So in other words, if they're short this one, then what they're going to do is they're going to buy that one first. And that's exactly what they're doing. So today we were able to put some longs on. Well, I put this long on at the end of the day when I saw what happened. And immediately, and this is what you're always looking for, immediately, boom, they just started buying that whole sector. And they were aggressive and they're still buying it after hours. And it wasn't slow buying. Look at the end of the day. So they had to be in that name. And you're seeing with SMR too. So they had to put money to work for whatever godforsaken reason back into uranium. And these things have hit some really core levels and they're pretty washed out on the SMR side. And you're also seeing OKLO washed out, NNE, all this stuff hit key levels and they're holding at least for now. And I think that that is something that we could kind of hang our hat on and go, okay, well, at least they're putting money there. The other thing to me is that financials are not cracking. Financials have not broken down. So what we might be having is a bifurcation market where some of these names are these most crowded trades, like the Metas of the world, the Googles of the world, the Amazons of the world that are not rallying. They might be blowing out of that stuff and they're just rotating into other names. I would just be really careful of that until you see stability. And watching PLTR go from, 42, where we were even buying the 45 puts and getting over 100% today, and we're supposed to be excited because it rallied. All you really do with these is you slingshot, possibly form what's like a morning star back up to this bar, and then you'll see if you roll over or not. For short-term traders, it's there. I mean, if you're on the short-term trading side, yeah, you'd probably come in tomorrow and want to be long. I mean, I get that. You could see why somebody might want to come in and say, no, I want to hold my long overnight. I nailed it, and I've got the right price. You could see that. I get it. And you could be right. That could very well happen, because you are grossly oversold. But I don't know that that's really where you want to, hang your hat longer term until you see stability. So you are seeing stability here. The other thing I would say is I would watch block. And I'd watch block because of what you're seeing happen with Ethereum. And if we go over here and we just lay this down, and I just want to show this because I think it's super interesting. This also cracked right at the same day that uranium cracked. Like that, they were the highs. They block and uranium, for whatever reason, they were the highs. They cracked. You are holding your 50 in here. And if you've been watching this channel for some time, I've been talking about this handle that needs to form on Ethereum. When we were up here, I said, hey, you're probably going to come back down. I did it in Saturday's video too. I'll link it at the end. I said, hey, you're probably going to come back down. I'd watch this level very carefully and then kind of go from there. What we have is, it's perfect. Like it's for long-term investors, you should be doing cartwheels because you have this huge cup, enormous cup. You broke out through the top of the cup. You've come back, you've back tested the cup and you held. So I could see why people today at the end of the day are buying BMNR, which is just pointless to me. I don't really understand why you would, but I would just buy ETHU if you wanted to play it, because you're going to see that if this moves, well, this stuff's going to rock. Like if you hold these levels, this stuff should rock. And then you start putting these levels in and you see you got near the 22 and that's a reversal. And I'll show it to you. See that low right there? That low is a grab. So if you really look at that low right there, you actually came in, undergrabbed right there. So you stop hunted, reversed. It's a pretty significant reversal today for this ETF. And I think that there's something to that. So whether that holds or doesn't hold remains to be seen. I would like to have seen it get over the 5, which it really didn't do. Maybe you're going to do that tomorrow. But you are starting to see signs here that Ethereum is setting up. And here, we'll take a look at it this way, that you are starting to see this set up and hold. I'm not going to have time to edit this out, guys. I've got so much to do tonight. But you are starting to see it hold if you look at Ethereum, which is, obviously trades longer. And you can see that the red's about to be negated. So if the red's about to be negated here, then the Ethereum ETF will just play catch up. You're always better off looking at the futures market because you have that longer time frame. And this is how I would, pardon me, this is how I would look at things. But I do see money going back today, not so much in the short covering, which was what we saw in tech, the people that were short PLTR, but I do see money going back into Ethereum here. I do see money going into uranium at the end of the day. And we should monitor that and see if that's something that we could start hanging our hat on and take advantage of why they're depressed.